Bitcoin searches for the bottom. How order flow signals the market's next move. Hey guys, it's Keith Allen, and today we are going to climb in and see if we can determine when that transition is happening, right? When are whales flipping from distribution to accumulation? We got the signals, we got the signs, and we're going to show you how to break that down, how to analyze that, and how to figure it out for yourself. Kind of the teach a man to fish principle, if you will. I hope you're having a good day. Market's been pretty good today, but we still have this sentiment that is keeping price from really, making that move that everybody wants to see. We've got Bitcoin hovering around critical macro level support. And, quite frankly, I'm not 100% convinced that the bottom is in. If it's not, I think that we're very, very close. But I think that there's so much FUD overshadowing the market. All of it really centered around tariff fears, recession fears, et cetera, et cetera. All of that, in my opinion, self-inflicted wounds from the current administration, going to be what it's going to be. But remember, headlines drive emotions. It's the charts that tell the truth and tell the story and tell the trades. So that's what we're going to analyze today. We're going to look at those critical support and resistance zones. We're going to look at the bind CVD in FireCharts. Yes, we'll look at the liquidity, of course, as we always do, but we're really going to take a close look at the bind CVD to see how you can determine when whales are accumulating or distributing, and how you can position yourself to basically swim in their wake, right? We got a lot to look at. So, and actually some pretty good nuggets in here. So you may want to grab a pencil and paper for this one to take some notes. Let's go ahead and dive in, smash all the buttons, if you will, and help me out and grow this channel, especially hit that share and the like, help me grow the channel. And if you subscribe, you never miss any of these future streams, right? I can't do them all at the same time every day, unfortunately. I'm juggling a lot, so they do come out at random times during the day. So if you hit the subscribe button, you never miss any of them. Live chat is also open today, as per usual on YouTube. So I would love to engage with you if you are inclined to do so. If you have questions you want to ask, if you have insights you want to share, I love engaging with you guys. It always makes for better streams. So by all means, chime on in and let's talk about it. And from there, we're going to climb into the charts. And the first thing that I am going to show you, I guess we'll start on the candle chart just so we can get a baseline of where we're at. And then we'll look at the, we'll look at some of the signals here in the order book and the order flow that I was talking about here at the top of the stream. So let's share this screen from TradingView. And we'll look at the daily chart here. As you can see, we have got some beautiful back-to-back trend precognition signals telling us, that price was not likely to revisit these lows. So yes, these are long signals, but they're really telling us not necessarily there's going to be a breakout, but they're telling us the price isn't likely to revisit those lows, which, this is a daily chart, a daily signal. So take that for what it's worth. You can see that momentum here in the A1, this is also a trend precognition algorithm down here. You can see that momentum still on the upswing, but resistance at this 200-day moving average has been very, very strong. We're now on our third consecutive day of rejections. We get a little fake out every day, it seems like, but still not enough to break above and to get back into this range. More importantly, to get back above this 2025 open and, start unwinding these moving averages. And I'll tell you, it seems like the 21-day and the purple 200-day are in an eminent path for a death cross, which is not historically a good sign. It's a bearish sign, right? It's showing you a downward momentum in this time frame. Now, things look better in that regard on the weeklies, where all of the moving averages are unwound. And what I do like here is that we have support. This is the macro trend line here. This is macro trend support, this line, right? This one right here, macro trend support. So we've come through that. We came through that. The reason we came through that was because We had a CME gap to fill, which got filled yesterday. It got partially filled, almost completely filled a couple of weeks ago. And well, we closed that gap yesterday. So that was good. And we also came down to, or at least close to, some key technical levels, including this, and there's confluence between these levels here. You see it, I have it marked as 75,900 and change, right? Almost 76,000. And the reason that I have some support there is if we look at the daily time frame, when we were, on this election day Trump pump to the all-time high, we were looking for some consolidation zones. And this was the first place that we had any consolidation whatsoever. This was, a 9% candle. I always look for, a partial retrace on candles like that. It didn't happen, right? We had green day, 1, 2, 3, 4, 5, 6, 7 consecutive green days. We had a little bit of consolidation here before breaking out and so on and so forth. So now price has broken down from there as expected. And we have come into this zone. So like I said, the technicals that I like here are that the trend line is currently still intact. The CME gap has been filled, and the 50-week moving average is still being respected here. Now, I would not be surprised in the least bit if we had another flush down to retest support, and whether that stops here at the at this 50-day moving average, 50-week moving average, which would be very, very strong and historically important, right? We can see previous examples of that here as recently as September of this year. And if we go back historically, there's a lot of times where that level has held, including back to all the way back to September 2023, where we really had a confirmation that these were no longer bear market rallies, and this was a consolidation here in that 25 to 30K range, and we had that breakout. So this means a lot to me. This is really the strongest technical support on the chart between this trend line and this 50-day moving average. So this range here, in terms of being a buy zone, this is all buy zone to me, in my opinion. And I'm happy to trade in this range, and I'm happy if we consolidate in this range. It would be more bullish if we stayed above the trend line, but I'm okay if we come down to here. I'm even okay. I'm not going to like it so much. Well, I'll like it in the sense that I could buy some more. But I think that there's an argument to be made for a flush all the way down to the 2021 top, 69K. A lot of people like 70K. This 69K level specifically, I think is important because it was the 2021 top. As you can see, we held under that level for a very, very long time. We consolidated under this level once we broke it here for about 8 months until we actually broke it sustainably. And this was broken on the, on election day, on that Trump pump, just like I had previously mentioned. So a full retrace of that is certainly not out of the realm of possibilities. Anything below this, and I would fear that the bull is done. But we are still inside the structure. The structure is still intact. The market is basically sweating out politics, and the administration is aware of what they're doing. They know that they're shaking up the market, but guess what? That's part of the plan. They're trying to do that, and they're trying to force the Fed into a rate cut. It's going to happen. It's just a matter of time, okay? And so there's recessionary fears, a lot of that being stoked by talking heads on the financial news networks, et cetera, if we can call them news networks at this point. And that is not being echoed by Fed Chair Powell. It's not being echoed by a lot of fund managers and economists. So while the economy the U.S. economy is still fundamentally strong. We had a good economic data today, by the way. Some cooler than expected inflation data. So that bodes well for strength of the economy. You never know if it's going to be a good news equals good news day or a bad good news equals bad news day. Today was a good news equals good news day. Not good enough to break through those technicals, but nonetheless good enough to keep us from sweeping the lows again. Now, maybe the market starts to get wise to the fact that Trump is using a lot of this as a negotiating tactic. And maybe the market is getting wise enough to understand that there's going to be likely more pain like this, more of him flexing and more of him starting and stopping policies and changing policies along the way. It's going to be messy. That's just the way the guy operates. So, but we should know that his intention is not likely to destroy the U.S. economy. The long game is obviously to strengthen the economy. So we got to ride out some pain until we get there. That's not me siding with any policies or tactics that he's using. That's just me, calling it how I see it. So with that in mind, things are, in my opinion, fundamentally strong. And based on what we're seeing in the charts, technically strong. So why aren't we moving up? Well, we're not moving up because sentiment is still, there's a lot of FUD. There's a lot of concern. So once that starts to be alleviated, and maybe next week's FOMC meeting and press conference from Fed Chair Powell will alleviate some of those recessionary fears. And so we'll see how the market reacts to that. I'm not expecting a rate cut this soon, but I think potentially May, June, July, we could see a rate cut coming. So does that mean that we're going to chop down in this range until then? It's hard to know. It's hard to put a time frame on this stuff because of the fact that, on a whim, the administration could say something bullish or something bearish on any given day that the market is going to react to. And the president is absolutely fine with the instability that he's creating because those concerns and that instability is triggering mechanisms or could trigger mechanisms that influence the Fed to cut. So, by the way, I mentioned that live chat is open, and Nick is asking, today's live stream started a bit late. Will this be the time every day from now on? No, it will not, Nick, and I apologize for today's late start. Been a busy morning, and as I mentioned at the beginning, it's hard for me to lock these in at the same time every single day. So if you hit the subscribe button, you get notified and you never miss them. And of course, they're always there saved until the end of time on YouTube and typically on X as well. On days that X isn't being hacked and exploited and we can't use it. So there you go. Alex, what's up, Alex? Is the total chart an advance of BTC chart or vice versa? What do you think? The total chart, you're talking total 3 or total market cap? Alex, let me know, and then we'll tackle that, or at least attempt to. I have open, I think I have a total 3 chart. Do I have a total chart open? I've got total 3 open. So let me know, Alex, if you're talking total 3 or total. And we can look into that. And let me see if I can actually add that. And let's give it a new color while we're at it. I haven't actually looked at this one in a long time, so let's see. Let's give it a color like one that I don't have on there. Total market cap. Okay, so let me clear out some stuff. I haven't actually looked at this in a while, so we're gonna analyze this together, I guess, right? BTC price versus total cap. So the question is the total chart an advance of BTC chart or vice versa? Well, that's an interesting concept, right? Because a high tide raises all boats, right? So we have periods where we see, um, you know, total market cap going up, and this would be interesting because I was looking at this yesterday with total three versus price. Total three, the difference between total and total three is total is all of crypto, and total three is uh, alts. So it's pretty much all of crypto. It's all of crypto excluding Bitcoin and ETH. So a similar concept here, right? In that the high tide raises all boats, and you can see that total, which is in blue, and total three, which is in purple, are very very similar, almost mirror images of each other, and even to a degree, we can see that there's total three and Bitcoin are also, this is Bitcoin price now, not Bitcoin dominance. Total three and Bitcoin also seem to move together. This is the high tide raises all boats theory. So which one's happening? Is one happening first? I think they're really kind of mirror images of each other. Where you look for divergences is between dominance, right? So here we can see this is Bitcoin dominance now in orange. Where you look for divergences and you see that dominance is, and I'll put the total back up there too and see how this resonates. Dominance changes, right? And so dominance will tell us, Bitcoin dominance will tell us when we have potentially an alt season developing, and that is when Bitcoin dominance drops below total three or below total crypto cap. Then we have an indication of something. But if we're just looking at Bitcoin price relative to total or total three, even, I think it's a mirror image. You guys may have a different perspective on that, and if you do, by all means, share it. But from what I see and from what I'm studying, I'm seeing, I'm looking for those divergences that can tell us that there's going to be a shift. And so, as I was saying, I'll go ahead and just go back to total three. We've talked about this where we looked at USDT dominance as well. And when USDT dominance is up, that means money's rotating out of other coins, Bitcoin and alts, obviously. But nowadays we see less rotating out of Bitcoin and more rotating out of alts. So to get that true alt season, you look for the times when we see that crossing between Bitcoin dominance and total three. You look for those big divergences or a crossing, right? So that's what I'm looking for at the moment. Are we positioned for that right now? You can see that we have a divergence happening between Bitcoin dominance and total three, but this is the opposite, right? This is weakness in alts right now. So what we're looking for is to see Bitcoin dominance work its way back down and total three work its way back up to get any glimmer of a potential alt season. Now, there's been some discussion in our Telegram community that we may be setting up for a transition to that soon, and especially if Bitcoin chops in this range for a little while, right? You know how impatient traders get. So if Bitcoin chops in this range for a little while, that could present an opportunity for alts, especially considering how much alts are getting hammered right now. So I hope that answers your question, Alex. Game Zone. Do you think we're in the BTC bottom, but seem no one interested to buy? Can we expect further down? Great question. And this is really what this entire analysis I intended to base this on. Okay, and as I said at the top of it, in case you missed it, we're trading around some really important technical levels, macro technical support levels, in my opinion. And the fact that we have this trend line here, there's a lot on my chart here. So I'm going to try and clean this up one by one for you. Number one, the macro trend line. That's the most important line on the chart. I'll show you where it starts. It starts back in, and let me clear out this trend precognition too. Right, we got the idea on that. Macro trend line. This goes all the way back to September of 2023 when we, had this consolidation in this 25K range and broke out. This was really the confirmation that the bull was beginning, and price moved above all the moving averages and unwound all those death crosses with golden crosses. And, here we are with the price action that we have today. We now have these winding up again, right? And so price fell through this 200-day moving average, not a good sign, but we do have support at the trend line, and we did close that CME gap. This was just like an added bonus, in my opinion. The CME gap was never, in my opinion, the really strong thing that we had to worry about. It was the trend line. I was interested in that CME gap because of where it sets in proximity to the trend line. But we can now clear that noise off of the chart. And so what's it going to take to break this 200-day moving average? Well, it's going to take a change in sentiment. Simply, it's going to change a change in sentiment. And the fact that we're down in this range, this is, as I mentioned, I think this is a valuable range to if you're dollar cost averaging into your position, and I'm now talking longer term rather than scalpers and swing traders. If you're a scalper or a swing trader, we are up against hard technical resistance right now. So this isn't the place to take your entry. Anywhere between this line and here would likely be a solid entry. I'm looking at this level here, the 75, 76K range. And the reason I like it because of this consolidation here, brief as it may be. But I also really, really like it because it has some strong confluence with this level on the weekly chart on the RSI, which you see we've just reverted from. And this level, I've got it marked at 41.5, 41, 42. I split the difference with you. I put it at 41.5. And you can chart this for yourself and look and see how price responds anytime the weekly RSI breaks below this line or breaks above this line. Here you go. Perfect example. Here's a breakdown right here. We came through the moving averages, right? Started losing those key moving averages and death crossed and the plummet into the bear market, and the recovery began right here. You can see it plain as day. So if you're going to trade this, you trade it. Yes, you can play the technicals and try and snipe the bottom, but the confirmation that there's going to be a breakout is when price makes it above this 41.5 on the weekly RSI. So we avoided that one so far. Doesn't mean we can't go down, right? There's plenty of times where we've gone down, flirted with it, come back up, gone down, flirted with it again, come back up. So we're going to watch for this, right? We could have this kind of consolidation happen right here. And that's fine. These consolidations are healthy as long as it doesn't break through and turn into this, right? This is what we want to avoid. So this is what we will be watching very, very closely. Here's another example. Consolidation, right? Came down to visit it, kind of double bottom down here. And this was a consolidation. It was a wider range consolidation, but it was still a consolidation nonetheless. So that's what we'll watch here in terms of potential breakdown. And for me, again, this 75, 76, this is the sweet spot that keeps us above this level and keeps the bull structure still intact, in my opinion. There's a chance we go down to this 69K 2021 top. That breaks the structure. So I don't really want to go there, but I wouldn't be surprised if it happened. Simple as that. So now let's get into looking at the order book and order flow to determine how to figure out when we're in distribution or accumulation mode. And this is really cool. So let's head over here. First of all, I led this thing by saying order flow is really the key. and a guy that I like to follow. I don't follow a lot of people on the social media platforms. I'll be honest with you, but there are a handful of trusted experts. I would say that I enjoy and I respect, and one is Martin. And Martin put out, this guy's a phenomenal analyst, and he shared this today on deposit inflows, showing some history here. Right, when you see these big inflows, the price action that follows. Okay. And so that means, and it's not a straight line, right? It doesn't mean the money comes in, you go up and you stay up. There are no straight lines in trading. So you have to be prepared for the intra volatility that happens. But we see price coming down and we see inflows increasing. And this could be a signal that doesn't mean that we're here yet. It just means we're getting closer than further from a bounce, in my opinion. So there's that. Now I will show you in FireCharts what I think is very, very clear. This is a thermal map of the order book. Most of you are aware of that. This is our binned CVD, and what's cool about this is, the binned CVD gives you a chance to analyze by order class, and we all know that whales are the most important order class. And yes, whales can disguise themselves as smaller orders, right? They have the ability to do that. The smaller order classes, retail doesn't have the ability to do $100,000, $1 million, multi-million-dollar orders. So we isolate the whale classes. Brown and purple are considered whales in our realm, anyways. And so the brown whales, $1 million to $10 million market orders, we're talking, and purple, $100,000 to $1 million sized market orders. And so brown, as impressive as they look, they really don't do a lot of volume, right? Their individual orders are larger than the other order classes, but the frequency that they do it does not equate to a lot of volume. Nonetheless, you can see that this is a normalized view here. And this is a 3-year chart, and we're going to drill it into the shorter time frames to get more bearing on it. But just to show you, you can see that there was an accumulation phase out of purple whales have historically had the most influence over Bitcoin price. Now, obviously, when purple and brown are working together, it's even more so. And when all the order classes work together, it amplifies things. But for the most part, over the past 5 years or so since we've been looking at this data, purple has dominated Bitcoin. And so since really Christmas of 2024 or 2023 rather, just before the kind of a lead up into the ETF launch in January of that year, we saw price start to appreciate rapidly, and there was some help from the red order class at that time as well. But we saw a big move, and it was evident. Oops, didn't mean to do that. It was evident that purple had started accumulating at this point. And yes, there have been periods where they distributed, but for the most part, it was up, right? And that trend continued up. They dipped a little bit here, kind of sold this top around 80K. This was when? This was March of 2020. So this is like exactly a year ago, where we had a local top. Things broke down a bit, but look, they continued to buy, right? They sold a little bit, but then they continued the buying in this range, in this consolidation range, before we got into this bigger breakout in September of last year, and up we went to a new all-time high. This, of course, we had the Trump pump in here, election day, somewhere around here, right? So you could see that they were appreciating. They were accumulating until things got toppy, and then the selling began. And purple actually started selling a little bit before brown, which is often the case. And so they started distributing into this range, and then we saw the breakdown. And the breakdown really occurred um, after some, how should I say, timely statements from the new administration, a little bit of P&D from that camp, in my opinion. But it is what it is. Those are the cards we're dealing with. So this is very, very clear distribution, at least since late January, right, when things topped. Now, what's happening? If we drill in, we can look at this in different time frames, and we can see this little tiny uptick here, which is in recent history here now, right? So we'll go uh, to the 6 month, and again, you can see they hovered in this range around the top, trying to see what was going to happen, and then it was clear we topped, and down we went. But here we go. Is this buying sustainable? Excuse me one second. I think I'm about to sneeze. No, I'm good. Amazing how I just stopped that. We are seeing this little uptick, and it's too early to know yet if this is actually a switch of strategy, a switch to accumulation. However, I want you to notice something here. Let's take it to the weekly time frame, right? It has to start at some point. And again, it's too early to say, okay, this is it, because this could just be, when you get on low time frames, it could just very well be buy the dip, sell the rip trading going on. But it has to start somewhere. And has it started here? And we're talking, this is in the past, day or two since we bottomed, local bottom here. I think that this is definitely a good range, and we are in the range of the bottom. But I don't know that we technically have the bottom until we have more sentiment, more positive sentiment, and that positive sentiment will bring more bid liquidity into this range. Now, you have this bit of uh, these large blocks of ask liquidity, which pretty apparent that is some liquidity hurting there. These guys never had any intention of getting filled here. If they did, they would just bring price in. So this is not to get filled. This is to herd price. And when they when we kind of hit this dip down here, and whales started buying again, and other order classes started buying again, we started to see some volume come in, and then miraculously they start stair stepping these asks up, allowing price to float higher as well. And so in the past few hours, we've actually seen a little bit of a change here, right? They started stepping back down. So this means more suppression to me, trying to keep prices pinned. Sometimes they do this ahead of economic data, or big like FOMC days, etc. I'm not sure what we have on the schedule for tomorrow. Tomorrow we've got big day tomorrow, jobless claims, etc., core PPI. So tomorrow will be another good day in terms of potential volatility due to economic news. But as long as there's lots of liquidity in this range, we're only going to go so high. And so I think that they're lowering the boom here to keep price suppressed, keep price from really breaking out above these technical levels. And the ones that I'm watching, obviously there's the 200-day moving average. That's the first one. And then it's kind of a range game. We got to clear that 21-day moving average. And then this prior range of consolidation, 91.6, we stayed above this level for a really, really long time. We had thought that we had flipped this thing, and obviously we had that breakdown after these death crosses. So this will be a key flip, but even more important is getting back above this yearly open here, which is at 93.3. So there's a lot of technical resistance, and right above that 93.3, we have two more key moving averages. So there's a metric ton of technical resistance in this range, really right here. So that should probably be red. but you get the idea. Um, so I don't think we're breaking out of this anytime soon, to be honest with you, unless we just get some incredible news that, tariffs are lifted, although that will be news for 2 days before, he changes his opinion on, or his policy on something else. Or maybe we get an end to the war in Ukraine, or things settle down and we get an end to all the mess in the Middle East. There's just a number of things, a number of catalysts that could help push price up. But I think the biggest ones are going to be some stability, or at least some understanding that we're not going to get stability out of the White House anytime soon, and that these strategies are just that. They are tactics. They are negotiating tactics. And the tariffs that we see in place today may or may not resemble the tariffs that we see in place 6 months or from now, or maybe even a day from now, right? So that's a fluid situation. And I think the market's going to get a little bit desensitized to the constant starting and stopping. We're going to get used to that. What the market really wants to see is some reassurance, some indications that we are not headed for a recession. So that's going to come out in the economic numbers, and it's going to come out in statements from people like Fed Chair Powell. And so he's got a meeting next week, and maybe we get that there. So back in terms of where we sit now in this phase, it does appear that at least, and you can't tell anything from a daily chart, by the way, right? So we have to, a trend, a day does not make a trend. 2 days does not make a trend. But the trend has to start at some point in time. So we'll be watching this, and specifically, I'll be watching the purple order class on the Bitcoin chart to see if they continue to buy incrementally in this range. And does that mean that they won't sell at all? Of course it doesn't, right? There's always traders in the game, and there's always profit taking. So you can expect some of that to be normal, but are they ultimately net positive, or are they going to take it right back to zero in this in higher time frames? So that's what we're watching here. At the moment, it shows up as barely a blip on the on the monthly, because it just started yesterday. It doesn't bother me the least bit that brown whales are not in there yet. That will come. And again, they don't do a heap of volume just because of the limited frequency that they trade. So I think we're really kind of pinned in a range. I've often said shared with you guys that liquidity dampens volatility. So if this stays like this, there's not going to be a whole lot of movement tomorrow, unless this opens up, or unless we see big blocks of bid liquidity coming in to push up through this. But as it stands, you have what's this at 91.5, not that 91.6 level. There's 78 million sitting right there just at that level. At 89, 30 million. Right above us at 85, 25 million. And right where we're sitting right now, we're dealing with 20 million. Price could eat through that when the sentiment is there, but the sentiment is not there just yet. So let's see if we get some positive news from the economic numbers tomorrow. And let's see if we get some positive news from Fed Chair Powell next week. And maybe that opens things up and, helps influence market sentiment just a bit. I'm going to tell you that tomorrow and Friday are going to be jammed up for me. I will do my very, very best to get some analysis out in the morning. At the very least, I'll post some charts. Not sure I'm going to be able to do it live, but do me and yourself a favor. Make sure you hit that subscribe button so that if I can go live, you don't miss it. All right. And with that, guys, I hope this has given you some insight to help you make some smarter trading decisions. If you're interested in any of the tools or info I'm sharing with you guys, I encourage you to join us on our Telegram channel. The Material Indicators Telegram channel is free. You'll find the link to it in the description of the video, and also on the Material Indicators X page at mi_algos. And with that, we're going to wrap it, guys. Hope you have a great rest of the day and a great trading week.